Welcome back. Welcome back. Welcome back, family. This is your good brother, your host, Nasut Imam Otumre, and I'm back again. I wanted to give you guys a video, a different video than I've been seeing on this YouTube and social medias and all these so-called educational videos about trading. I wanted to give you guys something really simple to think about when it comes to trading, all right? When you trade, or let's put it like this, when you enter a position, whether it's a buy or a sell, we do know, right, as analysts, or in some of you guys' cases, button pushers, you do realize that when you enter into a position, buy or sell, you must do the total opposite in order to exit the trade. And what I mean by that, it's only really three ways that you can exit a trade. Either one, you're going to hit your target. That's one way to exit your trade. The second way you can exit your trade is manually. The trade might actually be going your way and you're in the green and you decide that you want to go ahead and take your profits before it hits your target or before it actually come back to knock you out. So you manually take it out. That's the second way. And the third way is your stop loss. Your stop loss is being hit or taken away and whatnot, and you exit the trade unwillingly. Now, let's say that you buy the market and your target is being hit, and you buy the market and your target is being hit. Well, essentially, yes, you did make money, your target was hit, but that position is left as a sell position in exchange of your buy position. So right there, what happens, essentially, you found somebody who wanted to, you was buying and you bought it. So at the top, you actually found somebody to sell it at the top for you, whatnot. Because, if you're a buyer, you need sellers. If you're a seller, you need buyers. If your target, if you manually take out, right then and there, your buys are sell positions. Let's say that your stop loss is taken. What does that mean too? Well, if you was buying and your stop loss was taken, then that means that you are now what was a wanted buyer, now a unwanted seller. Now, in the game of supply and demand, especially when we talk about quote unquote smart money gets attracted to what we call a school of fish. A school of fish is liquidity. It's just as simple as that. All right. Institutions look for areas where they can liquidize liquidity, actually take it and whatnot. At the same time of actually trying to liquidize things, they have to induce the opposite of what they actually want to do. So let's say that the institution wants to buy. They have to induce sales. How would they do that? They would make it seem or give the illusion that sales are activated. A lot of times, not even a lot of times, all the times when KTG trade, we never make a move unless we know that traders are trapped. Meaning that either stop losses are being taken, meaning that the inducements was very convincing and has got the trader to go in a certain direction, and we know that the institution stepped in to trap them, right? It's many different ways, right? Today I'm going to show you a very easy way where we can look for ranges, which are just sideways markets, right? And in the range, not even in the range, we want to wait till the market makes it past the range to give us the information if traders are going to be trapped in that area. And the way how we do that is, if you notice, I just boxed out a range. You got a support, you got a resistance, you got a support that meets up, the second support that meets up with the first support, so that validates this particular support area. Then it moves up and validates the resistance area. So now you have a bona fide range for sure. It's bouncing around, boom, 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 boom. These are levels that everybody are looking at. Now, when we magnify or zoom in into the picture of the range, we notice at this point the market pushed past this level that everybody is looking at. Everybody is looking at this as a good support, this as a good support, and going forward, this as a good support too. All right, so we back again. So again, we have this as a great level, or so it seems, for the retailer to maybe take a buy. And right here we notice that as soon as it touched, they kind of gave the people what they want. So this is a good area for us to look for potential trap traders. Potential trap traders. Right? Because us, KTG, we look for a school of fish that's going to be trapped. And we look for the big fish, the guy with the S on his chest, or rather the dollar sign on his chest, to come and scoop up the school of fish, the trap traders. Once we know that they trapped, we can then take a ride with the big fish. Right? So we look for potential trap traders. And in this area is always, you're going to always find levels and ranges that everybody are looking at. Let's see, it's been hit so many times. 1, 2, 3 times. Sound like the count. 1, 2, 3 times the level's been hit. So we would think that the 4th time, because, you know, we are creatures of nature and we do follow trend, right? Traditions and trends. We can look to see that trap traders or potential trap traders can be manipulated in this area. So as we leave from our 1 hour universe, I like to always go down to a much, much more lower universe, preferably 30 times the universe that I actually see my setup on, to really, really dig into the volume of the market. All right? Because the volume is very important. Volume is very, very important. A lot of people talk about wyckoff. A lot of people talk about smart money trading. A lot of people talk about institutional areas and insufficient funds and whatnot. But the truth of it is, how would you ever know, just for example, in wyckoff, how would you ever know that this is a true accumulation if you did not have volume involved? And that's for a lesson in a video for another time. I'm not going to explain our way of looking at volume. Actually, I'm sure to be a description up later about a video that we did on volume. But the point of it is, as we get to our predetermined destination, our information station, or our point of interest, a lot of you guys like to say, we want to see a certain behavior there, especially dealing with volume. Now, I noticed this before we started the video, that in this area, they might be actually doing some accumulations, which is what we want. You know, in this area, the volume is getting a little testy. This is around 4 o'clock in the morning, right after London opening, right? We noticed that the market pushed up from this area. And if you notice, to thus far, right, lower low, lower high, lower low, this is the first time that it's ever being tested for this lower high to be tested. A kind of change of character is kind of coming. Right? We do notice here that they did break minor highs here and then flip down. So changes of character is happening right before we actually see more of accumulation occurring when the market checks for more demand in this area. Now this is where volume comes in, right? Because I don't want to make this so very long. I'm going to actually enter into this trade. Accumulation will show that there's an interest from the institutions by volume. As we get lower prices, what get attracted or who gets attracted to lower prices? It would be potential buyers, right? And we notice as we get this lower price to thus far, look how the volume peaks up, right? We come down, we try it again, right? A little balance of buys and sells in that area, right? The market gets lower, give us lower prices, and as soon as we get lower prices, what do we get? We get more input of volume, which represents buying or interest of buying in these lower prices. They're very, very interested in these lower prices. Remember, it's simple supply and demand. You want to buy low and you want to sell high. In this case, we are actually seeing the buys going on low. As it gets lower, not much volume, but when we get here, this last price that we see, the volume is excessive. Excessive volume can only be produced by, I want to say in my thought process, and I could be totally wrong, but I want to tell you that excessive price is done by two things. News, which is a collective, it's a collective indicator for everybody because everybody see the news. Everybody sees it basically at the same time. So this is where you'll get a nice pep of volume excessively. Or the institutions are actually adding positions or putting positions, stopping trends or stopping the train, so to speak, from actually selling, putting in positions in a way that they would start a uptrend or a markup. That's the only way. They have to stop the train, or rather slow it down, which that is what accumulation is, and fairly stop it to add their to put their positions in a way that they could start buying. Because let's put it like this: we're talking about institutions or trades from these guys that are put in as billions of dollars. If you go back to our lesson 1 trading course, we have an area on there where we show you the institutions actually anteing up together to put up for a trade. You might have $2 billion that they put up on one trade. So I don't know how you would compete with that with your little account. I don't care who you are, right? So if that's the case, and we know that they're adding trillions, billions, millions of dollars, we have to notice that these hits of volume are the institutions or a news feed at that time. What time is this? 10 o'clock. And it could be news. I could actually check the news forum just to make sure. Okay, so look. It's a little news, 10 o'clock at for the US. The manufacturing PMI. But that's not really heavy news, right? We have to teach you about how to interpret the news feeds and whatnot. That's not heavy news, right? And from this energy, we actually get a push away from this zone. So this is real buying down here. Next, I would have to show you what would be a confirmation as far as going forward for an entry after seeing such a sequence. But for now, what I'm gonna do for you guys as a treat, I'm gonna go ahead and I'm gonna enter this trade. I'm gonna go ahead and do some math, right? And I'm gonna actually show you guys how to double, triple, quadruple your small account, because I have a lot of people asking me, how much money do you need to do in your account to make money? I'm gonna show you guys in this, I think it's $35 in a $35 account. I'm actually gonna go ahead and I'm going to put a trade in and see if I can at least make that 5 times my risk. So give me 1 second. All right. So yeah, I like that. I like that from that push, and it could make it up here. So look, we're gonna go for 5 times our money. All right, and we have 16 pips, 17 pips at risk. Let's say $30. So $30 divided by 17 $17 will give us roughly $1.70. I like to round down just to make sure for my fees and everything. So let's say $1.70 that we will put down on this trade. All right, so I have the US CAD and on my trading platform. As you can see, $36. I thought it was $35, but we'll do $36. Why not? Just to show you guys, you don't need much money at all. We're gonna go ahead and put this down to $1.70. And I think we're going to go ahead and wait just a second. Let's see how this react to these lows again. Any double tap to this area would be great. So we will see. We haven't entered the trade yet. We actually might get a better. We might be able to put more money, get a discount on this trade, and put more money on our position. So let's see. Let's see. I'm sure you guys are patient. You guys will hang out with me, because why? Trading is really not exciting. It's not supposed to be exciting. It's supposed to be as boring as possible. To be honest with you, you make it as fun as you want to. But the truth of the matter is, we analyzing financial charts, right? And to be honest with you, because the market is plagued with elements of randomness, right? It's literally laden with randomness. It will move at any given time, at its will. You have to be really, really sure of the choices that you make. All right, man. I'm back. Technical difficulties. Sorry about that. But I did enter into this trade. Real quick. I want to show you guys. I had a little technical difficulties. And I did jump in it. I have a risk of $25 on this, an 18 pip risk at $25. And I am going for $122. So you guys do the math. We're going to check on this. Right now, it's not doing bad, but it's not doing overly great. So we'll see. You caught it right at the ground floor. And when I come back, we'll see the results. Peace. Yes. Welcome back, good people. Welcome back. I want to recap, come back and give you an update. Had to wait a whole day for this to come into our favor, but as you can see, it did. I am on my other computer that do not have the MT4 application on there, so I will not be able to recap that. But I do want to get inside here, dig in here, and let you know exactly what happened. As you can see, if we recap from yesterday, we was looking for this area to fully give us accumulation and give us confirmation to jump in. We did jump in, right? And we was going for 5 times our money. As you can see, we almost there. Like literally, we almost there. At this point, we've made this what we call a free trade. You know, the risk is off of the table. Now, I want to tell you about this scenario. If you remember, if anybody was listening, hopefully you were, I was saying that a double tap of this area will be nice. And so I was actually expecting that. Even with the entry at this point, I gave my stop loss a little breathing room. And actually, as it was coming down, I kind of played it as it was coming down, gave it a breathing room. I had a little bit more room. So in retrospect, I did invest $31. $31.22 or something like that. New stop loss was down in this area right here, and we survived it throughout the night. Throughout these dotted lines are the session switch over. So we survived all of that. We survived it through the session switch over. We survived it through the night, and this is where we are now. We are about a good 30 to 35 pips away from our target of 5-to-1 risk to reward. And yeah, this was a very successful trade. So I want to thank you guys. I want to get a chance to go ahead and plug the university, KTG University at thinkific.com. All right, I'm sure it will be up on the screen for you guys and in the description of this video. One thing you have to realize, 2 things you have to be sure about. That, hey, if you don't get your education from KTG, we both lose money. All right, peace, peace, peace.